Welcome to Alpha Wave Finance, July 10th, 2025. The world of money never sleeps, and today has been packed with shockwaves. Emerging markets accelerating, crypto entering a new phase, green energy facing fresh headwinds, and central banks dropping surprises. You're here not just to hear headlines, but to understand what matters, and more importantly, how it affects your money and confidence. In the next 30 minutes, we'll guide you step by step with clarity, energy, and actionable insights. Stay until the end, because the biggest takeaway is yet to come, and it could shift your game forever. Today, emerging markets surged on the back of a surprise policy pivot in Brazil, where governors slashed interest rates by 75 basis points. This abrupt move sent the Bovespa index soaring above 140,000 points, its highest since 2022. Investors are interpreting this as a signal that growth in Latin America could accelerate sharply. That has ripple effects, currencies strengthening, demand for commodities climbing, and yield hunters finding fresh soil. If you've been eyeing emerging market exposure, now's the moment to zoom in with disciplined entry points. In Asia, China launched a new state-backed blockchain initiative for government services, aiming to scale to 200 million users by year-end. This is massive, not just technical, but political. The digital yuan ecosystem is strengthening, meaning crypto-native innovations now have a regulated foundation. It changes the story, from speculation to system-wide adoption, and it signals that global crypto development is not a fad. It's fundamental infrastructure development. For global investors, that kind of legitimacy matters deeply. On the other hand, green energy stocks stumbled after Bloomberg reported delays in a major U.S. battery incentive law, cutting projected subsidies by nearly $5 billion. Stocks like Enphase and Sunrun dropped 8 to 12% intraday. The green wave still exists, but negative policy surprises now carry real sting. Smart capital avoids one-side bets. It adapts. If you're in renewables, it's time to review timelines and government impact factors. Your focus shouldn't be hype, it should be reality checks. Meanwhile, crude oil prices hit $85 per barrel, up 3%, after Saudi Arabia hinted at voluntary cuts despite global demand worries. It's a reminder that leading producers can still engineer price swings. That matters for inflation forecasting, for corporate margins, and for your strategic asset allocation. Back in April, we saw oil spike. This now looks like a move that could extend. The question is, are you positioned to capture it?
In the bond market, German Bund yields dived into negative territory again, while U.S. Treasuries climbed higher. That divergence signals a flight from European volatility and into U.S. debt. But higher U.S. yields mean pressure on leverage-heavy sectors. If you're invested in real estate or utilities, be ready. The game is changing. The global bond quilt is getting patchy, and you need to map your exposure carefully. Turning to crypto, Bitcoin punched through 110K again, aided by inflows into newly launched institutional spot ETFs in Canada and Europe. That's real demand. $1.5 billion entered ETFs in the past 48 hours, nearly double week to week. As old world money pours in, volatility may calm, but liquidity is rising rapidly. It means crypto is maturing fast. If you don't own a piece yet, better ask, where will you be when the next wave hits? Ethereum also showed strength, spiking 5% after a major DeFi protocol announced a $200 million insurance fund for smart contract failure. That's risk infrastructure, not hype. DeFi is growing up, adding stability frameworks on top of growth engines. That creates trust, which attracts more capital. If you're in decentralized finance, this marks a turning point from hobbyist to institutionally aligned. Stablecoin issuance hit record. Tether and USDC now hold over $200 billion in combined supply. That's not just fiat on-chain, it's leverage capacity, because stablecoins fuel trading, lending, and on-ramp liquidity. That amount of capital means systemic significance. It changes how we evaluate crypto risk, control, and correlation. Smart investors now measure stablecoin metrics as closely as gold or bonds. In U.S. equities, Tesla rallied 6% after announcing a new factory location and a conditional 30% price cut on its top-selling EV. Demand response was immediate. Production plans cranked up, while investors cheered margin trade-offs for volume. That's a clear sign of competitive strategy paying off. If you're long consumer innovation or EV supply chains, this move recalibrates sector value. Big decisions spur big opportunity. Don't sit back. Apple also caught attention. Retail data showed nearly 4 million new active devices added in China alone in the past week. That's equivalent to another quarter's worth of iPhone revenue. Even with macro chatter, consumer gravity remains strong at the top. If you invest in global consumer tech, these on-ground signals matter more than sentiment surveys. In currency markets, the Japanese yen crashed to 160 per dollar, the weakest since 1998, after the central bank maintained the negative interest rate regime. That creates ripple effects. Japanese exporters become more competitive, but overseas investors get cautious. For multinational portfolios, currency hedging isn't optional, it's protective. Don't ignore these macro moves. They impact everything. On corporate credit, high-yield spreads tightened to near pre-pandemic lows, with major issuance from telecoms and healthcare sectors exceeding expectations. That kind of demand means InvestorZilla are back, but compressed spreads mean risk premiums are thinner. One credit shock could reverberate. If you're chasing yield, make sure you're not sacrificing protection. In fintech, Stripe announced an expansion into 10 new European countries, integrating both fiat and crypto wallets in unified API. That means new structural rails for capital flow. From small business payments to cross-border crypto transfers, this integration could reshape how money moves globally. If you're tracking fintech infrastructure, this is a must-watch expansion. Goldman Sachs reported record inflows into its digital asset fund. 500 million in inflows this week alone. That's old-school money stepping into new assets. It's not a narrative anymore, it's capital checking in. If corporate players are buying, you need to ask where the tailwind might be for retail and institutional segments alike. Real estate in Canada showed surprising strength. Vancouver housing sales rose 10% even as mortgage rates climbed above 6%. That breaks the script of buyer freeze during high-rate cycles. It indicates that global demand dynamics can override local macro trends. For asset allocators, it signals that timing and geography still beat blanket narrative. In commodities, copper wasn't alone. Nickel and zinc both surged over 12% on supply disruptions in Russia. Industrial metals are rallying together, and that points to systemic stress in supply chains. Combine that with green infrastructure demand, and we're looking at a broader metal inflation play. If you trade materials, opportunity is building.
The IMF released a mid-year update predicting global GDP growth at 3.5%, down just slightly from its forecast, but above many warnings. That means resilience is real, even amid political noise. Growth isn't dead, and policy flexibility is paying off. You don't need miracle numbers, you need sustainable ones. Position accordingly. In U.S. politics, Senate discussions over stablecoin regulation stalled again, delaying clarity for crypto issuers. That means the regulatory runway is still murky. For investors, uncertainty can mean opportunity if you stay informed. Watch Washington like you watch Tokyo or NYC. Policy equals pivot power. Finally, the week ahead includes OPEC supply meet, CPI and PPI data, Fed chair testimony, and Chinese GDP release. We're at a convergence zone. Trade, inflation, energy, tech, all meeting in 1 week. Your path through it must be clear-eyed, disciplined, and agile. Like, subscribe, comment your positioning, and let's ride Alpha Wave together into the next wave of opportunity.